Good morning. This is the 0DTE morning market analysis, and today is Thursday, February 13th. And today's focus is going to be looking at inflation. And is it really a problem? I don't know, because the market doesn't seem to think so. Shrugged it off yesterday. So we'll talk a little bit about that. We have our last inflation number coming out for the week, and that's the PPI in just about 40 minutes. So let's get to it. First thing we do is we talk about our market situation for our 0DTE trades. As you know, we take out-of-the-money butterflies, an asymmetric trade, trying to capture premium and also place it in market direction, which is a little bit of a problem today, I'll have to say. But in any event, we take a look at volatility to discern whether or not we expand our exposure to that risk or contract because of the lack of volatility. We look at market direction because we are directional traders as well. And we also look at an entry event, which is all determined by volume structure, the levels at which we find support or resistance, although right now that's kind of up in the air, and I'm going to talk about the strategy on how we compensate for that given the current conditions. So let's get to it, and we'll go first to the charts. Off to the charts. All right, here we are. We've got the VIX. We've been stuck around below in Zombieland now for the past several days. We're at 16.12 this morning, which dictates a width of 25 to 15 wide. Of course, it's a range, and we all know that what we need to do is now figure out what end of that range we're going on. And really, my pat answer for this past week has been, I think we go to the upper end of the range because every morning we've had implied volatility, elevated implied volatility because of all those inflation numbers and Jerome Powell testimony. All of that has really added a little bit of juice, even though the VIX is down there. And yet, the VIX has not changed. So it's a very unusual situation. We have elevated volatility in the morning, every single morning, yet the VIX remains in Zombieland. So let's take a look at our next indicator, which is the big ass fly, which will determine, just to confirm and see whether or not that is a trade. Yesterday, I took the big ass fly prior to the CPI being released, and it really moved, as everyone knows, but I had confidence that it was coming back. I stuck with the trade and made a nice little profit. All right, so let's go to Thinkorswim. And we can see that we're at 21, which is well under our 25 threshold for taking the big ass fly in the morning. So that trade is on. Looks like we've moved down a little bit. Let's see, or up. We've moved up a little bit. So it looks like I would have to adjust the big ass fly by about 5 points. So let's go to, we'll just shift each strike by 5 points and see what we get for a reading. Okay. So the real reading really isn't 21. It is something closer to, let's see, we should really go up. Are we there? Yeah, we're right there. So 60.80 is the center strike right now, closest to the money. No, it's not. We're going the wrong way. What are we doing, Ernie? So we really need to be around 60.65. All right. All right. I get it. I get it. What am I doing? All right. So there's a proper placement. Interesting. All right. So we're at about 20. So now our center strike is right at the money. This is how we measure it. We're taking a look at what the debit is when there's increased implied volatility in the morning due to a market report like the PPI or the CPI or Jerome Powell speaking. Then the volatility will have the effect of delaying premium decay or inflating values of options. And so when you put those all together in the butterfly, what has the effect of is kind of rising the whole thing up and creating a smaller debit, which is good for us from a big ass fly trade proposition because we have more potential profit to collect once we've got it into the trade and less risk. And on top of that, as you can see, the real-time profit curve is much flatter. So that really means that our gamma risk or our sensitivity to price has been lowered as well. So everything about a heightened volatility in the morning is a good thing for butterfly traders. So we will be taking that trade this morning. I would expect moving into the PPI report, this is going to come up a little bit because we had a huge miss on the CPI yesterday, indicating that or suggesting that getting all my terms mixed up. Inflation is on the rise again. Now, we don't know. I mean, I've been suspecting this for a long time. Maybe it's an anomaly. We don't know. So the CPI certainly showed that. PPI will look at the whole market is really peered in on this. And that really surprises me. Why? Even though that we had that heightened CPI reading, that big miss, it was a huge miss. Why volatility or the VIX isn't really higher than it is. Really, really interesting there. All right, so let's get back to our chart. And so we're at TradingView. And so the next thing, so we're at about 20, so now we're definitely on the wide side of our range. So 25 wide is what our standard out of the money fly should be. So all this measure is for our standard trade that we take during the day, and that is the out of the money butterfly. We want to figure out how wide, what direction, and so forth. So 25 wide. Next to look at is direction. This is the big bugaboo. We don't know. We've been going sideways. So what are we in for? Are we in for what appears to be some imminent breakout? This, to me, looks like a big consolidation that's been happening since the beginning of the year. We're really starting in mid-December, and we've been just going sideways and coming to some sort of apex here. I don't know. You tell me. Does this look like kind of an ascending wedge to you? That's what it looks like to me. And we're getting down there now. And if you look at the Hull moving average here, it can't decide which way to go either. It's just been going sideways. So I don't know. What's the directional bias? Bullish or bearish? That's part of the problem here. And the other problem is that we've been getting a lot of overnight gaps. So let's take a look at the SPX on a daily basis. And we'll look at the past several days. We can see all of these big, huge gaps. And so that kind of defeats some of our directional bias when we're taking a trade. We're trying to figure out which way it's going to go when a large portion of the move is happening overnight. So low volatility, overnight gaps, that's leading us to another strategy. And so if we go back to the VIX, let's take a look at that. We can see we have our standard trade here on the left. And then we have these edge case trades, the time warp, which is a multi-day DTE, and then we have the Batman, which is really two butterflies, one on either side of the market, a call fly and a put fly. But that's really relegated to higher levels of volatility, as you can see here, where the time warp or multi-day is relegated to lower levels of volatility. So that's what we're looking at. You know, you could consider putting on both a 0 DTE trade and a 1 DTE. Yeah, so there you go. All right, next thing to look at is market structure. So we determine market structure by looking at volume profile, looking at the delineation between high volume nodes and low volume nodes, as well as the deep crevices, or what I call volume wells. And we mark those all up because those are areas of support and resistance. You can see yesterday we had at least a couple of opportunities for taking trades. That is if you were long, and I was long. So we had the big move down because of the CPI report, and then when the market opened up, it pulled back right to this level here. And let me just sort of expand this so you can see it very clearly. And so I've marked all these levels, and as you can see, all the pullbacks happen right at those levels. Isn't that amazing? So we were looking for something like pull up, pull back, bam, and then take the trade. Of course, we had another opportunity like that here. Pull back, bam, take the trade. So a lot of people ask, well, how do we know whether or not it's going to turn there? We have a number of different methods. We can look at order flow. We can look at divergences. There are a number of different methods to tell whether or not a structural level is going to hold. And so we put those in place. Very rudimentary stuff, but really easy to detect. So in any event, today we're going to be looking for something similar. And that is a pullback into one of these structural levels, maybe here. Let me just copy that and paste it. Or here. Now we're coming up near the top, or I'm sorry, the bottom of a node, and so we're likely, depending on what's going to happen, likely to break through that node and continue to move up. So I would expect that we'll probably even have an event up here, depending on what the PPI does. So, for example, I wouldn't be surprised if we have a lot of volatility like this, and then we open the market and we do something like this, come up to this structural level, bounce off of it, take the trade, right? So I'm not saying that's exactly what's going to happen. I'm just going by what I perceive as a potential outcome based on the structural levels and the volatility that's going to be introduced by the PPI. The market doesn't put, or I should say, the Fed does not put as much importance on the PPI as maybe others do. So the Wall Street wonks, the lemmings, they're going to follow whatever the Fed does because they worship the Fed, and so that's the way they'll act too. All right. So that's our general outlook, right? And I guess the last thing really is to go a little bit into what the talking point is. And so, as I said, the market has been stuck in a really tight range for weeks. Traders are wondering if it's a major breakout coming. With inflation data dropping this morning, what I mean by dropping is that it's it's going to be released. An implied volatility slightly creeping up, at least in the morning, but not in the big picture. We're looking at some kind of tipping point, and as we saw a pattern developing. I'll go back to that. There's definitely a pattern developing that looks like a rising wedge. So we got to take a look at that. So all that combined, Fed testimony, CPI report, PPI coming up, unemployment claims. We got to see whether or not those produce something. Unemployment has been on the rise. I would expect if that number also misses and we see higher unemployment, that's, believe it or not, is going to be a positive for the market, because that would indicate the Fed is more likely to do rate cuts than rate hikes or hold the line. All very interesting. We call that opposite world. So bad news on the economic front. Here, let me go back to the big head here and kind of wrap this up. Yeah, opposite world is really the phenomenon that when there's bad economic news, the market interprets that as good for the market because that would they would anticipate cheaper money conditions or more accommodative money conditions in the future, because the Fed is more likely to respond to bad economic conditions by dropping rates. Get it? Yeah, it's a little weird. So a bad unemployment report and mediocre inflation report would cause this market to just soar. And maybe today is that breakout, but we don't know. And that's one of the reasons why we would go to that multi-day DTE, maybe put a call fly on a little out of the money, then put another one on for tomorrow, a little further out of the money, to execute the time warp strategy. So there we go. That's it. That is it. Hope you enjoyed this report. If you're interested in learning more about the 0 DTE strategy, go down below join our Zero DTE Academy. It's a school community. It's a growing community. It's only been around for about a month and a half, and it's already got 235 members, and we expect that to go up into the thousands within the next couple of months. Watch it. It's going to be super exciting. We have live coaching calls in there. We have a vibrant community, a full course on the entire Zero DTE strategy, learn how to be an options trader and collect premium. All right, there you go. Thank you all very much. Coach Ernie, out.